President Bola Ahmed Tinubu urges Indian investors not to procrastinate as Nigeria offers best return on investment. The Nigerian National Petroleum Company Limited advocates for gas as the solution to energy poverty eradication in Africa, and oil prices edge up on anticipated U.S. crude stock draw. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Benny Adams, your guide. A very good morning and welcome to Business. We start with the cheering news that as Nigeria moves to attract foreign investment into the economy, President Bola Ahmed Tinubu is assuring Indian investors that the country is more than ever safe and ready for business, as his administration is creating conducive business climate for local and foreign investors. President Tinubu was addressing investors at the Nigeria-Indian Presidential Roundtable and Business Conference on the sidelines of the G20 Leaders Summit in India. State House correspondent Musbao Danwahab reports.
President Bola Tinubu is a special guest at the G20 Leaders Summit, but is here not only leveraging the platform, but also owning them to market the investment opportunities in the largest African economy.
Definitely, we are open for business. You've heard it. We have capable, intelligent, and highly committed individuals and the government to drive the economy of Nigeria and to be able to give you the best return possible. There's nowhere else you pinch penny in America and any other part of the world. Nigeria offers the best return on investment as it today. So invest.
Is equally strengthening the existing trade relations, staging an interface between Nigerian investors and their Indian counterparts, with investments in oil and gas, steel, telecommunications. Among other sectors, Indian companies are second largest employers of labor in Nigeria. And now it is more reassuring as the president promises to expunge all challenges inhibiting ease of doing business in the country.
Don't be frightened about investments in Nigeria. Bring it on. I have a team, and I am the captain of that team. I assure you, we solve problems.
It's already a work in progress, with some policy decisions of the current administration enhancing ease of doing business, and the Indian investors are ready to plug in.
For you to take that head on and create a single foreign exchange rate and create an atmosphere where foreign investment can feel comfortable coming in. Because if you invest and can't take your money out, it becomes a big dampener. You understand that, and you took a very important step in that regard.
This exchange must continue through our schools, both physically and virtually. Nollywood and Nigeria's film industry could do closer collaboration with Bollywood.
We welcome you to continue to invest in the Nigerian economy, create jobs in Nigeria, reduce the dependence on foreign exchange, and as you say, even allow Nigeria to be an exporter of manufactured goods.
We in the Ministry for Trade and Investment have embarked on reviewing and reforming our trade policies and agreements to protect you and to also encourage you to come in.
The amazing things that you've done with technology here, changing government services, helping to save costs, but also ensuring that citizens can have access to good services as well. It's something that our president desires. And we're looking for ways to learn from how you've done it to ensure that we can take that back to Nigeria.
Nigeria-India trade volume hit about $15 billion in 2022. That is now about to witness an increase with 3 MOUs signed among partners, 2 on information technology and 1 on infrastructure development. From New Delhi, Musbao and Wahab.
Now taken from Musbao informing us about those 3 MOUs signed, and investors commit to invest more than $14 billion into the Nigerian economy. The CEO, Infrastructure Corporation of Nigeria, Lazarus Bazo, say Nigeria needs a little above $3 trillion in the next 30 years to bridge the country's infrastructure gap.
In the railways, in agriculture, in ports, things that are critical to Mr. President's strategy for increasing our import substitution and export manufacturing.
A project of $3 billion we are declaring today. Of course, we'll be meeting government and different ministries in Abuja in times to come, and we will make a way out how to reach to that level.
Now gold extends decline as dollar gains upper hand. Let's see how other commodities are trading around the world. Now, global economic growth has been projected to slow significantly amid high inflation, tight monetary policy, and more restrictive credit conditions, particularly to the most vulnerable emerging markets and developing economies. Now, experts around the world and leaders at the 78th United Nations General Assembly are calling for comprehensive policy action to foster macroeconomic and financial stability among many emerging and developing economies, of which Nigeria is not left out. And incidentally, President Bola Ahmed Tinubu is in India and has already attracted investment worth more than $14 billion. To discuss these issues and more, I have joining me from Dubai, United Arab Emirates, Jamil Ahmed. He is the chief analyst at online trading brokerage GTC. He is an expert on international financial markets. Jamil, you are welcome to Business Express.
Thank you for having GTC.
It's been a while. How is Dubai this morning? Okay, it's morning in Nigeria. It should be noon in Dubai. Am I right?
That's correct. It's just past midday in Dubai.
Okay, great. European and Asian stocks closed lower on Wednesday as investors focused on the oil market outlook and inflation concerns after Saudi Arabia and Russia extended a set of voluntary oil supply cuts up until the end of the year. Does it look like another round of increased price volatility, or is there no cause for alarm as the Brent crude goes above the $90 benchmark?
Well, firstly, you are right to point out that we need to watch this because that announcement was very much unexpected. While the market was expecting for Saudi Arabia and Russia to extend production cuts 1 month, in reality, they actually extended the cuts until the end of 2023. Now, what does this suggest? This suggests that the major oil producing nations will do more to keep oil prices higher for longer. But as you pointed out, this creates somewhat of a double-edged sword scenario, because this also means that those economies that need to import oil, such as the likes of the economies in the United Kingdom, the European Union, are going to see higher inflationary pressures for longer. So while that some economies might have government revenues that are linked to oil prices, such as where we're sitting right now and where we're talking to in Nigeria, we also have the other side of the coin, that those economies that are already being absolutely relentlessly smashed by higher inflationary pressures are going to face them for longer. And this also means more strength in the US dollar for longer, which is exactly what the market does not want as we start to unwind 2023.
Well, for Nigeria that exports crude and imports refined products, what will be our fate? More so that a subsidy has been removed and crude production is still being hampered a little as a result of oil theft, though security measures have been put in place to ensure increased production.
Somewhat so, because the government revenues are regardless still linked to the oil price. But the problem here is that with the Naira free floating, the Naira is also going to face the additional weakness and the pressure that's going to come from the stronger US dollar environment. So as we were beginning to look towards the final quarter 2023, what we wanted to see and what everybody's begging for right now in a global market perspective is for weakness in the greenback, which is the US dollar. However, the US economy continues to perform completely above the peers when it comes to stronger economic data, regardless of inflationary pressures and regardless of the US interest rate policy, seeing US interest rates increase at a pace we haven't seen in a generation. And in fact, many businesses have not seen US interest rates so far and so high for decades. But because the US economy is performing so well, and because we do have the inflationary headwinds that are going to continue for longer, even more so now because of the stronger oil prices, that does mean that dollar strength is here to stay. And that's not the good news that I wanted to be sharing with everybody today either.
Well, you have spoken about challenges that the world is facing with a stronger US dollar, and that you can expect strengthening the US to continue into the end of 2023. Why is this so?
Because while other economies are facing the risk from the stronger US dollar, for starters, higher inflationary pressures for longer, because we are all importing our commodities and our materials in US dollars. In fact, in the United States, what we wanted to see is that such high US interest rate policy, let's not forget, US interest rates now are standing above 5%, and they've moved at a very aggressive pace over the past 1 year. But we haven't seen that starting to impact the economic data. Not enough anyway. For example, the US services PMIs yesterday showed a figure above 54. 50 means growth. Any number below 50 means contraction. So regardless of the US interest rate policy, that sector is still performing well. But if we look at the data that's coming out from the United Kingdom and Europe, even from China, we are not seeing such a strong macro environment there. This encourages investors to hold on to US dollar holdings for longer, which is why I see a big shift in market expectations. We were hoping that we would get a signal that the Fed might be willing to cut interest rates into 2024, which again is the green light that we all need for a weaker US dollar. But the data is showing the other story, and I think that story could unfortunately continue for months now.
Well, talking about the US dollar getting stronger against other emerging currencies, looking at the trading, the US dollar has been felt across the different asset classes, with gold declining by just over $20 this week. What is your outlook for gold? Do you think it can continue to decline near term, more so that other currencies are trading behind the US dollar, particularly for Nigeria? Now, a dollar is changing for as much as 900 naira.
So for gold prices, we've seen that shift $20 lower just over the past couple of days. That's only days after the US dollar weakened against gold quite significantly based on the lower US interest rate expectations. But in fact, that play has already reversed. So September's been a pessimistic month for gold prices already. I do believe that gold prices can still continue to extend their recent downtrend. We're looking at $1,900 as a pretty big support level, but unfortunately, the market has completely been on the other side of the US dollar trade. We were all hoping that the US dollar had peaked and that had weakened, but in fact, even today, the dollar index is coming towards 105, which is actually the yearly high. And should the dollar index be able to continue to strengthen because the US economic data has been relentlessly impressive, this also means that gold prices could sink as low as below 1900. Maybe we'll be looking at the 1850 range, but we do hope that that's an exaggerated market direction, and that we do get some signals from the Federal Reserve that even if the data is holding up, we will not be raising US interest rates even further, which is the case scenario we currently have in markets.
Now, when it comes to developed FX, talking about foreign exchange, both the Euro USD and the Great Britain USD still remain close to milestones low. Do you expect both the Euro and British Pound to remain weak for the rest of 2023 compared to other currencies, particularly in emerging economies?
Yes, because both on a technical analysis perspective and on a fundamental economic perspective, we see weakness in both of these assets. The pound US dollar is likely to be the one that can fall the most. The Bank of England are really stuck between a rock and a hard place. They can't raise interest rates any further realistically in the United Kingdom because the mortgage terms in the UK are completely different to the mortgage terms in the United States. To give you an example, in the United States, the mortgages, if you're going to buy a house, fixed terms are generally 20 years and longer. However, in the UK, the system has been, since the global financial crisis, either a 2-year mortgage or a 5-year mortgage. So we're seeing mortgages jump in the UK consumer at a time where the UK consumer is already facing high, extensive inflationary pressures and lower disposable incomes, which basically means they can spend less money on the UK economy and consumption anyway. I do think that the pound US dollar could fall below 125 anytime. To be optimistic on the pound, we need to see weakness in the US dollar. Unfortunately, we're not getting that trend, and the same can be said to the euro, although most of the weakness in the euro has already been priced into that asset.
Okay, we know that we are in a challenging global macroeconomic environment as it is, where there is a great deal of external uncertainties from financial markets perspective. What is the one theme that we can hope for that might lift some pressures while external forces remain out of hand?
That's the early Christmas present that we want. And the early Christmas present that we want is actually a deterioration in US economic data. Unfortunately, we haven't got that for our summer holidays yet. But generally speaking, if we do see the US economic data weaken, the Fed expectations, the US central banks, will be that the US central bank will need to cut interest rates at some point over maybe the second half of 2024. That might sound like a long time away, but financial markets and investors always price in the news earlier than the outcome. So if we do see a deterioration in US economic data, and it does start to show that this relentless strength cannot continue for longer, then we can start to see US dollar weakness. And that would lift a great deal of pressure, not just in global financial markets in terms of currency weakness, but also in terms of inflationary pressures. And that would provide a more optimistic environment heading into 2024, because 2023 has been a very challenging macroeconomic picture and a financial market picture overall.
Okay, President Bola Ahmed Tinubu, our president, has just signed investment deals worth more than $14 billion at the Nigeria-India Economic Roundtable as a sideline event to the G20 just yesterday. What does Nigeria need to do to ensure this announcement translates to real investments in real terms?
Continue signing more trading deals. I think that there are some positive steps by strengthening the relationships with India, because actually one of the major themes of the G20 is not only going to be that China might not be attending, but the theme is that the Chinese economy, which we all know is the world's #2 economy, is only a matter of time before it becomes the world #1 economy. It's experiencing its own slowdown. That could be because the COVID measures were in place for too long. The Chinese economy actually has only started to remove the COVID measures over the past couple of months, which again is maybe years after some of the advanced peers. But the Chinese slowing economic picture is a big problem for the world economy, because the world economy has become so sensitive to demand for trade from China. So if the China economy is not able to get back up to speed in terms of the car and get back to the levels that we were used to before 2020, then economies like Nigeria, like the emerging markets, have to strengthen relations and reliance elsewhere. So the deal with India is a step in the right direction, but of course, it's going to be a big gap that's filled from China, and you need to see more trading deals and a better macro environment in order for those deals to actually translate to work on the ground taking place.
Wow, thank you, Jamil Ahmed, for sharing your thoughts with us at this particular point in time. We'll get to revisit these conversations to get to know how Dubai is doing it well and where Nigeria can learn from it. Now, oil prices edged higher on Thursday after industry data showed U.S. crude oil inventories were expected to have fallen last week, signaling tightening supplies on top of extended production cuts in Saudi Arabia as well as Russia. U.S. crude oil inventories were projected to fall by 5.5 million barrels in the week ending September 1st, according to market sources citing American Petroleum Institute figures released after a market settlement. Official inventory data from the U.S. Energy Information Administration is due this Thursday. Brent crude futures edge up 12 cents to $90.72 a barrel, while U.S. West Texas Intermediate crude futures gained 11 cents to $87 per cent. Well, the Minister of Aviation and Aerospace Development, Festus Keyamo, assured Nigerians of taking proactive measures towards the provision of the world-class aviation services in order to enhance the safety and comfort of passengers engaging in traveling within and outside the country. The minister gave the assurance during the facility tour at the Nnamdi Azikiwe International Airport, Abuja. Aliu Kabir reports.
Accompanied by the Managing Director, Federal Airport Authority of Nigeria, Kabir Yusuf Mohammed, the Minister of Aviation and Aerospace Development, Festus Keyamo, took the whole day to inspect various sections of Nnamdi Azikiwe International Airport, Abuja, including the cargo terminal, the domestic as well as the international terminals. The minister affirmed his determination to work with all critical stakeholders towards putting every facility in order, especially the cooling system and the escalator, among others, for the benefit of the passengers whom he accorded much priority. But generally, the minister could not hide his satisfaction on the state of the facilities.
Beyond that, we should also have a maintenance culture. And what did I tell the MD Fan and my peers? I said, let us get people who can maintain them and we can hold them responsible. We can give it out for people to maintain these three critical infrastructure. The lifts, or the escalators, the chillers, or the air conditioners, and the carousels, or the conveyor belts. So that is what I think we need to do. For the structurally, I think Abuja is a bit okay in terms of the structure and all of that.
Speaking on the second runway at the key priority area, the minister added his ministry and that of the Federal Capital Territory are putting all machineries in place for settling those concerned in order to pave way for contractors to be back to site.
As of today, the report I have is that the money we paid to FCT for them to pay to the settlers there, they have started paying them and they have started moving. I asked the CECC people who are doing the project, they said they are giving me a date of sometime next week for them to clear the site and move to site. So we are going to invite Mr. President to come and commission it. And it's a project Nigerians have been waiting for forever.
The minister also inspected the ongoing project of the permanent headquarters of the Federal Airport Authority of Nigeria, FAN. In Abuja, Aliu Kabir, NTA News.
Now, President of the 78th session of the General Assembly, Dennis Francis, in his inaugural address at the opening of the 78th session of the General Assembly, says there is the need for long-term investment in conflict-affected regions and calls for enhanced financing, technology, debt sustainability, and capacity building. He urges member states to follow through on Addis Ababa Action Agenda and accelerate the transition to clean energy, while supporting climate adaptation.
Long-term investments are needed to leave no one behind. To this end, we must find tailored solutions to the specific challenges of countries in conflict and post-conflict situations. The General Assembly must lend its weight to enhancing financing, technology, debt sustainability, and capacity building in places where development is in deficit and where assistance is most needed.
Well, this is where we end this edition of Business Express. We value your feedback, so keep the comments, observations, and suggestions coming. Be informed that previous episodes are available on YouTube on NTA's channel. Business Express returns Friday at 3 p.m. I am Benny Adams saying, have a beautiful day ahead.
From dusk to dawn, 24 hours a day, NTA International is with you in your living room, office, everywhere.